Okay, hi everyone. Welcome to today's webinar. Before we get started, I can still see a bunch of you guys coming into the room. So I'll give about another 2 more minutes to let more people join our session. Again, apologies for the delay, for the slight delay, because I was having some technical issues with starting the webinar. So apologies for that. But yeah, I'll give about 2 more minutes to let more people join, and then we'll go ahead and get started on this week's topic, which is on Fibonacci retracements. Yeah, feel free to let me know if you guys have any other questions. And yeah, I will see you guys in about 2 more minutes. Thanks, everyone. Okay, so let's go ahead and get started. So a risk warning and disclaimer before we get started. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. A disclaimer: the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Oop. Okay, so I'm Melanie and I'll be your speaker for today. I'm an investment analyst at Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here is our agenda for today. We are firstly gonna go through the essentials for Fibonacci retracements, including kind of a checklist for you to follow when identifying Fibonacci retracements. And then we'll go through the key points for an ideal market structure, looking for any significant swings and market trends. Then we'll talk about the different Fibonacci levels, from negative all the way to more than 100%. And lastly, we'll introduce Fibonacci confluence and go through some examples that played out nicely by combining Fibonacci retracement levels. And if we have time at the end, we'll also go through some live analysis charts. So feel free to pop your requests if you have any into the chat. Okay, so let's start off with a quick history lesson of the origins of Fibonacci. So Fibonacci was named after Italian mathematician Leonardo Pisano Bigolo. I think I butchered that, but he was famously known as Leonardo Fibonacci. However, he did not create the Fibonacci sequence. Instead, Fibonacci introduced these numbers to Western Europe after learning about them from Indian merchants. So Fibonacci retracement levels were formulated in ancient India between 450 and 200 BCE, and the sequence is also referred to as nature's numbering system. So it's often observed by known people in flower patterns, hurricane patterns, and even galaxies. So here's a really simple checklist to follow when you're first starting out with Fibonacci retracements and some things that you might want to look out for. So firstly, is the market structure clear? We want to look out for big zigzags, and we'll show you some examples in the coming slides. Next is to identify the recent trend, so our prices going up or down or moving sideways. So we normally will advise to follow the general trend of the chart unless you have very obvious reasons as to why you think that chart the price might bounce off a certain support level, or you think that prices might change direction. Next is to identify recent major swing lows and recent major swing highs, and we'll show you some examples as well of significant swings. And next is to connect the extreme 2 points. So from the highest to the lowest if it's a downtrend, and from the lowest to highest if it's an uptrend. Okay, so insignificant swings. Let's first take a look at an incorrect example or something that you want to avoid. So here's an example of insignificant swings, which are generally bad points to use for Fibonacci starting and ending points. So you can see here price movements are way too small and there are no significant swing highs or swing lows. And this is an example of insignificant swings. So again, there's no clear swing highs or lows, and price movement is generally small. So here's a correct example. So here you can see that our significant swings have very clear move up and down with obvious peaks and troughs and very clear market movements. So this is kind of what we mean by significant swings. Okay, again, another example. So here you can see I've drawn out the peaks and the troughs to point out exactly how significant your swings should be. Okay, let's move on. So another thing to take note of is to follow the market structure. So Fibonacci retracement trend lines should never cut through the two large areas of market structure, as you can see here. Okay, so your Fibonacci trend line must follow price structure clearly, and in this case, you can see there is a zigzag market structure, and the retracement drawn here cuts through the market structure, making it less effective. So when drawing your trend line, you should follow the movement of price and not deviate from it too much. Okay, so here's a correct example. We want to pick market structures with a clear upward and downward movement, something that follows the price movement and works better on higher time frames due to less noise. Okay, and here's an example of a clear market structure. So although Fibonacci retracements can definitely be used in more choppy markets, but also in trending markets, it's important to look for really clear market structures. So here's an example of an unclear market structure. So you can see it's a lot harder to analyze on these kind of charts. Okay, so one thing we can do to find clearer market structures to do our Fibonacci analysis is to actually adjust the time frames so that the market structure is clearer. So what might look messy on an M30 chart might look very clear on an H4 chart. If there's too much chaos on the shorter time frames, it doesn't mean that the entire currency pair is not able to be analyzed and that at that point in time, you can actually take a step back to get a clearer view. So here's an example of what we mean. So here, you can see on the M15 chart, it's quite messy and there are no clear movements in price. But when we change it to the 1 hour time frame that we see here, you can see it's much clearer, and you can see the highlighted portion has much clearer movement. Okay, so there's two criterion that you should look out for here. Firstly, a clear swing low or swing high. Secondly, a clear trend between the starting and the ending point. And then your Fibonacci retracement is most likely to be accurate. So now that we know what conditions to look out for, let's look at how to use it on both the MT4 and TradingView. So if you're using MT4 like me, here you have the layout on MT4, just a screenshot, And let's zoom into our toolbar. So when you hover your mouse over this option, where the circle is at, it should come up and say draw Fibonacci retracement. Okay, so that's how you can use it. After which you can click on wherever you want to place your Fibonacci retracement, and it should come out looking something like this, is very faint red line. And if you want to edit or add any Fibonacci levels, you simply right-click on the Fibonacci trend line, and this is what you might see. Fibo properties, click it, and then under the Fibo levels tab, you can click add, and you can proceed to add whichever levels you wish. So here you can see I've added a negative 0.618 level, which is essentially minus 61.8%. Okay, so now let's take a look at Fibonacci retracement on TradingView. So here we have a typical layout on TradingView, and we're looking at pound dollar. So for TradingView, the Fibonacci retracement tool is this symbol. So basically the 4 horizontal lines. So you'll be able to find this on your sidebar or on the floating toolbar as well. So after you've completed or you've connected your Fibonacci trend line, this floating bar will pop up over here. And when you select settings, this selection box will appear where you can select any other levels you wish. So when first analyzing the levels, we'll select the negative levels, mid-range, and above 100% levels so that we can view all 3 Fibonacci types at once. Okay, so these are the Fibonacci numbers that we typically use. So you can take a screenshot now if you want, but I'll also share a website with you guys on Fibonacci in case you guys want. So now that we know how to draw the Fibonacci retracement trend line, we can look at the different types of levels ranging from the negative to more than 100%. So although we are still using that same tool that we went through earlier, the Fibonacci retracement, it can lead us to 3 different types of Fibonacci methods. So firstly is the expansions, which are your negative levels, so those below 0%, namely the minus 27.2 and the minus 61.8. And also we have the retracements, so those are the mid-range, so from 0 to 100, namely these 5 levels, 23.6, 30.2, 50, 61.8, and 78.6. And lastly, we also look at the extensions. So those are the levels that are greater than 100%. So 127 and 161.8. So we'll go through extensions, and projections more in depth in the next couple of webinars, so stay tuned for that. But in this webinar, we'll just be briefly introducing the levels and also how to use the mid-range levels, so the Fibonacci retracement levels. Okay, so here you can see all the different Fibonacci numbers that we mentioned in the previous slide and how it looks drawn out. So take note of the starting and ending points of our Fibonacci trend line. Okay, so you can see we are following very closely from the swing high all the way to the swing low. Okay, so in all of these methods, you can see positive Fibonacci retracements. These are our extensions. Mid-range are the retracements that we're going to be looking at today. And then the negative, which are the levels less than 0%, which are our expansions. So for all of these 3 Fibonacci techniques, we are only using one tool, the Fibonacci retracement. Okay, so here's an example of the Fibonacci retracement method. So price bounced off the highlighted area at 61.8. You can also see that it's a overlap level with this swing high. And that's normally how we analyze. So during our live analysis session later on, I will also go through some of the techniques to combine your retracement with your horizontal levels as well. Okay, here's another example, but using the 38.2 level. So you can see, take note of where we are connecting it from the swing low to the swing high here. And this is what I mean by using horizontal levels with Fibonacci. So here you can see we have a swing high here, and price kind of bounced off this level as well. So this, when the swing highs and the swing lows meet at the same level, we call that an overlap level. So at this overlap level, I've now identified that it also lines up nicely with this 38.2 retracement level. And you can see price subsequently bounced off of this highlighted area. Another example here, now we have two levels. So we have a resistance as well as a support. Okay, this is in line with two swing highs and two swing lows. Okay, and then after identifying our horizontal levels, we then go in with our Fibonacci levels. So we have one huge Fibonacci level here, where our 61.8 lines up nicely with our resistance level, and another 61.8 retracement. This one is from the swing low to the swing high. This is also in line with a double swing low support. Okay, so subsequently, prices bounced off this level and are moving towards our swing high over here, swing high resistance. Okay, okay. Next, I'll just briefly go through expansion, but we'll get more in depth into this in the next few webinars. But yeah, I'll just briefly go through this. So for expansions, we're actually looking at the levels that are less than 100, less than 0%, so the negative levels, and also for expansions, we typically look out for this kind of lightning bolt shape. So if you follow the yellow arrows, you can see it's kind of a flash symbol or like a flash zigzag shape. And this is kind of the shape that we look for when we're using Fibonacci expansions as well as Fibonacci projections. Okay, so projections are a different tool, so we'll get into that in our last part of our Fibonacci series. But for this one, um, you can see I've placed it just at the first arrow, and I'm kind of projecting where prices are going to um, move towards. So it's bounced off the 0%, bounced off the 61.8. This is a retracement. And then now it's moving downwards, and we're expecting it to come down to this support, to bounce from this minus 27.2. Okay, so you can see that's exactly what happened. Price moved downwards, bounced off on minus 27.2, and price usually comes back to the ending point over here. Okay, reason being, as I mentioned earlier about the overlap levels, once price, you can see it has a swing high, swing low support level. So once price surpasses this level, we are expecting it to retrace and come back to that level. Another example, this example, we are looking at Fibonacci extensions. So the levels that are greater than 100. Again, I'll just briefly go through the idea behind it. So for this, we are looking for a kind of a Nike tick shape. So if you follow the yellow arrows, you can see a very clear shape. Starting point and ending point follows the head, so the shorter part of the tick. Okay, and it's important that you can only use this method once price has surpassed that 100%. and it's actually a tick and not just a V shape. Okay, and the levels that we're looking at are 127 and 161.8. So you can see here prices bounced off the this swing low. Okay, bounced off and it's moving upwards. And the projected level is 161.8, and you can see it reversing off and heading back downwards. So that's kind of just the idea behind the Nike tick. It's just to identify reversals. Okay. Any questions so far? Okay, let's move on. So when is a Fibonacci retracement invalid? Oop. Okay, I'll go through that in a bit. Just some points to take note of first. Okay, so one of the most common scenarios of an invalid Fibonacci retracement is when price makes a lower low. So assuming you're drawing a Fibonacci retracement from the top to bottom, which you'll see in a bit, if price breaks below your lower low, then it's no longer valid. So if there are bars on the right that break your ending point, it becomes invalid. And there are Fibonacci retracements that are negative, that we talked about already, the expansions. And we'll talk about these as they basically go beyond your endpoint and yet they are still valid. So this is an example of an invalid retracement. So price has broken below that 0.0% level, right? And it's made a lower low. So you always want to remember to pick the lowest point with nothing on the right that's lower than it. Okay, now let's look at combining Fibonacci retracements. So the trick over here is to find multiple Fibonacci retracement levels that line up together so that you can increase the probability of a bunch of Fibonacci retracement tools or levels that work together versus a single Fibonacci retracement level working on its own. So that's the definition of Fibonacci confluence. Okay, in the example that you see here, we are combining a minus 27% Fibonacci expansion, a 161.8 Fibonacci extension, and a 78.6% Fibonacci projection. So again, for all of these three, we will get into them in our coming webinars. We'll get more in depth. But for now, I just want to highlight the confluence area. Since there are two or more Fibonacci levels that line up, we're expecting prices to bounce off of that area. Okay, so in this example, we have a 61.8% Fibonacci retracement. If you follow the blue line, okay, that is our Fibonacci retracement line. And we also have a 100% Fibonacci projection. So if you follow that line, the orange trend line, that's where we've placed it. Okay, and you can see prices bouncing off that level, that confluence level. Another example, we have our 23.6% Fibonacci retracement. That lines up nicely with the 61.8% Fibonacci projection. So you can see this confluence area here is a rather significant area because price has already bounced off of this level multiple times. So you can see in the past, we have had one swing low in line with another swing high and a bunch of swing highs here because price has tested this level many times, forming an even stronger confluence area. So we are expecting prices to continue to test this level. Okay, so another important point that we want to make is trade management or risk management when it comes to Fibonacci confluence. So your stop loss, we typically will advise to place your stop loss beyond and your take profit before a key Fibonacci confluence area. But this also works for any major resistance or support area, not just confluence. If you have multiple pivot point levels, if you use that, pivot points or even just swing highs or swing lows, if you have many levels that are lining up, telling you that it's forming a confluence in that area, we'll place our stop loss beyond, take profit before. Okay, reason being is that price is attracted to such strong areas of Fibonacci confluence, and more often than not, Fibonacci confluence attracts these prices, and price might not be able to push past them. That's basically the idea behind Fibonacci confluence. So if your stop loss is right before instead of beyond it, you'll most likely get stopped out right when the market starts to reverse and then start complaining about stop hunting. Take profit before, reason being when price reaches your confluence area, as I mentioned earlier, there's a high chance that it won't be able to go beyond it. And instead of reaching your profit target, it reverses back to your entry or even worse, your stop loss. So that's again one of the reasons why people might complain that the market is being manipulated because they missed their take profit by one pip. Okay, so if you look at the example that I've attached here, here we're going in for a buy entry. So that's where my take profit is above, my stop loss is below. In this case, my Fibonacci confluence will be, my take profit will be placed before it, and my Fibonacci confluence will be placed, or rather my stop loss will be placed beyond that confluence, so that I don't get stopped out when price does this reversal. Okay, any questions? Okay, if not, let me just pull up my charts and then we can go ahead and take a look at some charts together. Do you guys have any requests that you'd like me to go through? Oh yes, before I get into that, I just wanted to briefly mention, um, since we are talking about Fibonacci retracement, feel free to take a look at this website if you need. Um, I saw a question in my chat asking if this session will be, if you can have the recording. This session is being recorded, but I'm not too sure where it will be published. You can feel free to email the IronFX admin team, and I'm sure they'll be happy to help you. But in the meantime, feel free to check out this website. Okay, yeah, so yeah, we just go through Fibonacci retracement quite in depth. We have an in-depth video if you want to watch it again, or extensions, some things to take note of. Um, yeah, how to draw a trend line. So if you need a recap after this webinar, feel free to just check this website out. It's just forexarmy.com, and it's under your trading guides, how to draw a Fibonacci retracement correctly. Completely free to use as well. So yeah, feel free to just check it out. And we have some examples, some more examples of confluence areas in case you're still unclear on that. Okay. Okay. Um, Okay, let's take a look at gold. Okay, let's take a look at gold. So on our weekly time frame, you can see prices of gold moving up on our daily time frame as well. Okay, with prices moving in this ascending trend line. Let's go ahead and analyze this on the 4-hour time frame. Okay, so 4 hours, you can also see that uptrend as well. Although prices have reversed slightly. So this is going to be my first resistance. Or actually, this will be my pivot. Okay, and this will be my first support. So I'm going to go in with my Fibonacci levels first. Okay, none of these levels are valid because price has already broken out of all of them. Okay, so if I go in with my projection, okay, you can see my 61.8 lines up with my pivot. Okay, I have this huge Fibonacci levels here. So for this one, I'm using a projection, which we'll get into in the later webinars. But basically, this is the flash shape that I talked about earlier. Okay, so my pivot, you can see 61.8 is in line with that. You can see my 78.6 is also in line with that 100%. Okay, so I'm just going to keep these two levels, and this will be my resistance. So remember I mentioned earlier that we'll place our stop loss, or rather our take profit right um, below or before your confluence areas. So you can see here I have two Fibonacci levels, so this is my confluence area, so I'm placing my take profit below that. Okay, now if we look at what we learned today in terms of the retracement level, okay, I'm trying to follow the chart as close as possible. Oops. Okay, so you can see my 50% lines up nicely with my first support. So I'll just keep that. Mm. Okay, my 23.6 also lines up with my first support. I'm going to move this trend line. Okay, and I'm going to draw a closer trend line because this trend line is more relevant since it's on the shorter time frame. Okay, so we might see prices continue to drop slightly towards our trend line before bouncing off, and it might continue upwards towards our first resistance. Maybe let's take a look at some indicators to see if they support our analysis. So you can see MACD does support our analysis that prices will continue to drop slightly. Okay, so I'll get rid of Ichimoku since that doesn't support. Let's look at our moving averages. I like to look at both the SMA and EMA. And you can see recently prices have dropped below both of these indicators. So they are also giving us a bit of a bearish signal. If we look at RSI, okay, RSI isn't telling us much. Okay, stochastic isn't telling us much as well. Let's maybe look at our Bollinger Bands. Okay, you can see prices kind of heading towards our bottom band. So that does support our analysis. You can expect it to continue to drop a bit, but I am expecting it to reverse back and head towards our first resistance, only if prices are able to break out of this pivot level. Okay, so for now, slightly bearish momentum, okay, towards this ascending trend line. Okay, but I am expecting it to reverse off and continue heading upwards in the long run. Okay, but that's only if price is able to break out of this pivot level. Okay. Okay. Are there any questions? If not, let's take a look at WTI. Okay. So on our weekly time frame, prices look like they are kind of moving in a downtrend. On our daily time frame as well, although there is a slight increase. And on our 4-hour time frame, you can see prices generally moving in a downtrend as well with this descending trend line. Okay, but overall, yeah, descending trend line, but also recently prices moving upwards slightly. Okay, we do, as I mentioned earlier, we do follow the general trend unless there are very clear signs of a trend reversal. Okay, but this is going to be my pivot. This level here will be my first support. And my swing high maybe here. Okay, my 50% lines up with my pivot. Again, this is a retracement. Okay, so the trend line that I drew starting from this top to the bottom, and I'm looking at where prices reversed off of. So you can see price reversing off this level, and that's in line with the 50%. Okay, my 100% also lining up. This is a projection. Okay, you can see my 100% projection also lining up with my first resistance. Okay, so when you can't find any levels when you're zoomed in, don't be afraid to zoom out and see if you can find any other shapes and patterns. Okay, another retracement from the swing low to the swing high here. 50% lines up nicely with our first support. Okay, another retracement from here. Actually, I think this retracement deviates too far. So you can see the shape over here is like this, and then it deviates slightly. So my trend line cuts this huge area here. So this is not a very good line to use for retracement. So I'm not gonna use that. Okay, now let's pull out some indicators. I like to use Ichimoku and MACD because at one glance I can see exactly what the charts are telling me without much analysis. So prices are moving within the cloud. So when it moves within the cloud, it suggests a change in trend. So it's not really telling us anything right now. So I'm going to remove Ichimoku. MACD, you can see a very, very slight bearish change. So I'm going to keep KIV or MACD. Okay. Let's maybe look at our MEs, SMA and EMA. Prices have started moving below both of the indicators, so that is a bearish signal which supports our analysis that prices are going to continue to drop. Let's see what else. Stochastic, RSI. Okay, so on our RSI, you can see prices moving in this descending trend line. Okay, so this is a bearish signal. On our stochastic, it's actually a hidden resistance. Okay, so you can see if you were here for our divergence session, okay, this is basically what a hidden resistance is. So you can see prices making lower highs, but on our stochastic, you can see prices just testing this resistance level. So not making lower highs, but just maintaining at that level. So yeah, this also supports our bearish analysis. Okay, remove MACD for now. Okay, that's for WTI. Any questions? Okay, if not, that's all I have for you guys for today. Thank you guys so much for joining me. I hope you guys found this session helpful. Next week, we will be talking about the second part of our Fibonacci series, which will be our expansions to the negative levels, and we'll get into more depth, go through more examples, and yeah, I'll see you guys then. Thanks, everyone. See you guys next week. Bye. Oh, excuse me. Oh. Bye, everyone.